This is, okay, let me just forget about this big of structure. With this particular beam, our recent high, is this our high? Let me say A, this one is A, A, and B, B. I want to mark one, is B, and we have C. That's why I said you will get tired when you are using only your higher high and higher low. Now, where is our reset time? Is it A, is it B, or is it C? What's our reset time? Is it A, which is this, or is
C.
it this, or is it C, which is this? This is the problem of traders. Now, let's see. I can see a string low, which is the lowest form. Someone says C, C, B. Okay, C, C, B, C, C, B. Now, let's look at the market. Let's look at the market. C, C, B. Some say B, some say C. Where is our recent break of structure? You see a break of structure here, which happened to be the recent break of structure. After since this, price have not break a structure. Ever since this, price have not break a structure. This is our recent break of structure. That's the first thing you have to say. Now, and we see that now, this is the low high that caused the break of structure. This is the high that caused the break of structure. But the trading range is between this A and this low. But this is the high that caused the break of structure. This is the high that caused the break of structure. But the trading range is A and B. I'm talking about daily range. That's why you must understand advanced market structure. It's still that daily range. Now, what happened? Price give us a pullback to this particular zone, and we see a lot of sellers coming in after price sweep out liquidity. There's particular liquidity at this particular zone, they sweep them out. There's particular order block at this particular zone. It's another block here. Price sweep it out. 1, 2 liquidity before selling down. Selling down. So when price was selling down, price was not able to break out from this low. Because all our expectation, according to the previous analysis, we see that when price is coming back down, it was able to break out from this low. When price is coming back down, it was able to break out from this low. But in these scenarios, it's a different case. Despite the fact that price sweep out liquidity before this impulsive move, it wasn't able to break out from this low. That's what a red flag. Because previous markets, it was breaking it out. The high was breaking out the lows. But in this scenario, it's a different thing entirely. The low wasn't able to break out. And that's what gives you a signal that something is wrong. That's why you must understand advanced market structure. Now, the real low high of the market is C, not B, not A. The real high, the recent high, the high of the market now is C. If price break out from this C, definitely price have changed from a downtrend to what? An uptrend. From a bearish order flow to a bullish order flow. That's why advanced market structure is important. Because it's helps to know the deepest market movements, to understand the market deeply. Not just your higher high, higher low, your normal basic structure. Because they are using your normal basic structure for this market, again, you will collect higher. Now, let's continue. I think I've explained that now. Now, C will be our high. This is our high now. This is our high of market. I buy us, I be able to break it out. I'm no longer what? Interested in selling EU. I'm no longer interested in selling EU. As a matter of fact, right now, I'm no longer interested in selling EU right now. All my main focus is to be keep buying. Because price has valuated this high. And if you look at it previously, no high that have been broken. This is the high. This is the high. You see it. Price have not broken it out. You see, it does not. But in this case, it violates it. It's a red flag. That's why I said now. I said it explains how Big banks. How big banks engineer trends. Just like this trend now. This is what? A bearish order flow. But the process of price breaking up from this high, he have engineered the trend. He have changed the market trend for what? A bearish order flow to a bullish order flow. Engineering of trend. Advanced market structure will help you to know. And if I'm the one, I'll continue buying from this particular, because if you go to your lower time frame like 15 minutes, yeah. Okay, I won't say that yet. I won't, let's continue. The more we go, I will explain this more. I don't want us to be so fast with it. Let me take it step by step. I said it explains how big bounce engineer trend, which change, as you can see, liquidity graphs, just like what happened here. This is a liquidity. This is an order block. This is another block. This other block is valid. Why? Because there's a liquidity at this particular. So when price come back to this other block, what happened? The market very well. Price come back here, it mitigated it after continue what going down. But what happened at last? Price went out. It swept out all the liquidity before selling down. So advanced market structure will help you to know that even though this liquidity have been swept, this other block has been swept, price have not changed sentiment. Despite the fact that other block has been swept, the price does not change sentiment. Because most of you think that after price have break out from this other block, will continue buying. If you go to your lower time frame, what you'll be seeing here, like 1 hour. If you go to your 1 hour now, just look at what you are going to be seeing. Look at what you are seeing. You will continue buying, because if you look at it, impulsive move. This is your other block, and you see something like impulsive move without your other block. You say, market not dey go up. Market not dey go up. This is a break of structure. So definitely, here will be my other block. Here will be my liquidity. And you'll be looking out for what to buy. And look at what price did. Price come back to that same other block. And what is this? This is a bullish engulfing. And what you go do? You go to buy, they go up. And what you have market go down, side they go down. Wrong analysis. Wrong analysis that you do for there. That's why advanced market structure is important. So after sweeping out liquidity, that's why the market sweep out liquidity is still continuing going down. Going down. But the red flag is this. He wasn't able to break up from this level. He was not. Now, most of us are thinking that until price break out from this B, there's not market structure shift yet. Until price break out from this A, there's no market structure shift there. Well, if you dey think that way, you go wait tire. Say until price break out from this A, before we go see market structure shift. Let me see. Say, can I see the swing low? How is it they show like this? How they show like this? Okay. See, the thing do me for USD card. You see, so that's why it's very important. It's very, very important, because you will think that this particular B now is the high, or the price breaker from this high. No, you see, not high. Price is no longer interested in A. Price is no longer interested in B. So why price is interested is what is C. Is C. That's what price is interested in. Not B, not A anymore. Not A and B anymore. Now, I said liquidity gap and internal price movements. Most of our problem, most traders, their problem is internal structure, lower time frame. They are having problem with lower time frame. You know why this thinking? They are having problem. He said, PTC almost take my life yesterday. Sorry, brother. I don't want to. That's why you must calculate risk before you enter any market. The problem is lower time frame. The problem is 4 hours, but this lower time frame, how do you take understand that? How do you take no? See, this particular zone here is a break of structure. This particular zone. How can we know
That guy where they
that this break of structure?
do.
How can I know that this break of structure is valid in my lower time frame? How can I know that this particular break of structure that is here is valid? How can I know that this particular break of structure is a real break of structure from the internal break of structure? This is not the external, this is internal. Because most of the internal break of structure They are meant for one thing. They are meant for one thing. And what are they meant for? They are meant for noise making. All those internal vehicles wey dey see so na noise maker dey be. If no be entry, nothing go carry me come 15 minutes time frame come enter market. Because all these vehicles wey dey see so na noise maker dey be. Na wetin kill us now, see am for EU now. If you look am now, from your internal vehicle structure, you go know say this thing market dey go up. If you look this thing from your internal vehicle structure, you go know say make I look am now, look am, check am out. I show you. You go tell you say market dey go up. See am now. Every sign, see am. You go see this kind market, you go still dey sell. You no fit sell. You no go fit see this kind move. Wey you go talk say you go sell. That's why internal structures, they are noise making. That is not the real structure. Look at it. Despite the noise making, what happened? Okay, look at what happened. Look at what happened. Look at what happened. Despite everything, despite the impossible movements, they are made for noise making. That's why I don't have to focus on them. The only time I'm coming here is whenever I want to see, look out for buying opportunity or selling opportunity. If not, what will carry me come in? What will carry me come in? Especially December, if you not take time, this thing, period of the time, not trade too much. We just enter first week of December. If you not take time, you go collect. For me now, for what Apple give me for BTC, for me, I don't calm down well for trade this week. I don't calm down because market, now first week of December be is. it already, if you not take time, I know what talk about this. Now, this internal vehicle structure, they are noise making. Don't focus on them, don't pay attention to them. The only way you are coming here is just whenever you want to enter the market. But apart from that, they will never help you. They will never help you. Now, with the help of advanced market structure, it will help you to understand the internal structure very, very well. So now make I talk say higher. If you talk say higher low, where they go snap, it be higher low. Now basic be all those things. Now small pikin soft be that. Because higher low, no go make you no go explain this thing what they explain give you. Higher low, you no go explain and give you. Now, what are the concepts of advanced market structure? What are the components of advanced market structure? Now, the components of market structure is higher high, higher low, lower high, lower low, which is the basic market structure. But the component of advanced market structure is quite different. It's quite different. You say it never get liquidity sweep. It's a flippers. C is a swing guy, and everything from C swing guy internal structure. I don't understand. The swing guy is a swing guy, and everything is from C. Yes, C is a swing guy, sure. Now, what are the components of advanced market structure? When we're talking about advanced market structure, what are the things to consider? That's what we mean by components. When we say components, what are the things to consider? Without them, your advanced market structure is useless. Now, in the case of basic market structure, the things to consider is just your highs and low, lower high, lower low, higher high, higher low. But in the advanced market structure, it's different thing entirely. What you need to consider when it comes to internal advanced market structure is this. Number one, you need to consider what they call internal structure and external structure. Internal structure and external structure. It's situated many things there. Internal structure and external structure. Number two, break of structure and change of character. You must consider your break of structure. You must consider change of character. You must consider market structure shifts. If you want to consider your advanced market structure. Another one, you must consider inducements. You must consider liquidity sweep if you want to understand advanced market structure. Internal structure, external structure, break of structure, change of character, market structure shift, liquidity sweep. Another one, you must consider displacements if you want to understand advanced market structure. Another one, you must consider daily range. I talk about daily range. Daily range if you want to understand advanced market structure. Another one, you must consider trend continuation, that is reversal logic. The continuation, some people call it market phase. There's a particular movement on how the market is moving all the time. Some people call it market phase, some people call it order flow, some people call it reversal logic or trend continuation. Anyone, or call it trend continuation, reversal logic. Anyone, they are still the same. Order flow, trend continuation, and reversal logic, market phase. Any of them, you must consider it if you want to understand advanced market structure. Not just your highs, not just your low. That's why you must understand this deeply. Now, let's talk about internal structure and external structure. If you look at what's going on here, the external structure is for 4 hours, which is a higher time frame. And our expectation as a trader is this. I say, I'm trading, boss, if you explain inducement for us, inducement, many things they why. Inducement, I will make I look what I will do. Because many things there, I will just explain there. I will just briefly explain it. I won't go more deep. Now, in the case about the external structure, that's why you need mentorship most of the time. I won't lie to you, bro. There's a lot to learn here when it comes to trading. In myself, say every day, me say as a upon everything I know, so I see the thoughts I don't know anything. Upon everything I know, I see the things I don't know anything. I still dey try to improve myself every day. Because this trading, many things they if you want today, next tomorrow you go come back. Oh. No be whining. Eh? Because market will change every single day. See Donald Trump now, wetin Donald Trump don go fix war with Venezuela, whether na dey hear updates. Venezuela and US now, dey prepare to fight war as me and dey talk now. As me and dey talk now. So many things dey go on, and all those things dey affect market normally. Na make you need to dey updated as a trader. It's very important. Now, let's continue. When my price come back here, like initially, when price was coming back down, it was breaking up from the previous low. It break up from this previous low, it break up from this previous low, it break up from this previous low, it break up from this previous low. And in this case, it wasn't able to break up from this previous low. Instead, price come back here and started going up. That's a red flag. Now, instead of you to be panic or look at what's going to happen, what you're going to do is to go to your lower time frame to see the reaction of the market at that particular spot. Now, let's go to 15 minutes time frame. In our 15 minutes time frame, this is the spot. This is the spot. This is the spot. Let me just do it. The price tends to change. This is the spot. And what do you see here? Here is like the last break of structure that took place in the market. Here. Here. Price sweep out liquidity at first. It now go up, fee, and now finally break it out from here. That took place. Now, what happened? What do we notice? We notice that when price break it out, it was going up, back, P. And what do you see? See that price was able to break out from this side. Which gives us what? A change of character to the upside. So when market always change, it don't first occur for 15 minutes time frame before 4 hours. So this 4 hours, so you see, so this market structure shifting the for 4 hours, it don't first start for me. That's why advanced market structure is important. That market structure shifted before, so it don't first start. It's a market sweep, inducement, liquidity sweep. Are they not the same? Market sweep, inducement, no, they're not the same. Not convince yourself. Not convince yourself. Now, if you look at now, price give us this is where the change of character occur first. Before this thing started to go up, so before market started to go up, so it don't give us sign from here. It don't give us sign from here before it come break out from this market structure sheet. So for 15 minutes typing now, it don't give us change of character. And for we, and what do we see here? We see there's a particular liquidity here. There's a liquidity somewhere around this zone. There's a liquidity somewhere around this zone. There's a liquidity somewhere around this zone because this particular one is another bit of structure here. So this one, we use it as liquidity. Price come back here, they sweep out liquidity. And what is this? Give us an positive move. And what do you see? Price continue going up. And it gave us another break or structure to the upside. I give another break or structure. Don't forget, the change of character started from here. It started from what? From here. Because our expectation is that we are expecting market to continue what? Going down and break out from this low. This is the low in 4 hours. But market was not doing that. Because if you look at it initially, price will just keep on breaking out from the previous low in your lower time frame. If you look at market just dey break out from the previous low, they go down. See am. Now, in this case, now it comes up. It can't change. It can't make a break out from the previous low. It can't go break out from the previous high. We give us change of character. From there now, market can come here. It give us a pullback and was able to break out from this high. Here, this particular zone become liquidity. This is the first. Why is it liquidity? Is because number one, I believe that this particular zone here, we're supposed to be our liquidity price of mitigator. And if you look this one right there, it's not too strong. It's not too strong. Then I can market if sweep out this one, sweep her out. Then come back here, I give us an impulsive move. And we see another break of structure. And we see this another other block. Another block is here. Other block is here. And what do you see? Fee price come back to that other block. Look at it. Fee. Again. And here is the high of the market. And even you go in after you see impulsive move, this is an impulsive, this is like a bearish engulfing. You see that kind of thing, you sell, you buy from here, put your stop loss here, target this high to your take profits. Which happen? Price smash your take profit. Bam! Again, price give you another break of structure. This is the power of advanced market structure. It give you another break of structure. What happened again? Is it break of structure? What's happen? Here will become automatically here. Here might likely be liquidity. No, this one is not clear. I can't use, if I use here as liquidity, okay, here will be our other block because this low is more lower than this one, no count. Here will be our other block. Here will be liquidity. Price come back to this other block. And what do we see again? Price continue, but after it's a bearish engulfing. You buy again. No, but you that's advanced market structure for you. Buy again, put your stop loss here, target this side. Price what? Smash or take profits. Again, now you come out another buy. You put this here is another liquidity zone. This is the power of advanced market structure. Yeah. And there will be your order block. You can mark out here or mark out this entire zone so that you won't miss out. And what happened? Price come back again to that particular zone. Yeah. Come back again to that particular zone. And what is this? Money star. You buy again. Put your stop loss. You buy again. Again, put your stop loss. Buy. Should buy. Okay, buy. Buy. Put your stop loss below this zone and target the next key level as a take profit. Got it. Fee. What happened again? Price smash you out. These are the power of advanced market structure. It's all of this. Sorry, this thing started from here. Here. So you don't target the market, they come here. Here. You collect this one. You collect this one. P. You collect this one. P. You collect this one again. Just the collect and they go. Advanced market structure. So it helps you to understand the internal structure and the what external structure very well. That's why it's very important. It will help you to understand both of the two difference. Now you are taking opportunity because of what happened in your 4 hours. Because in your 4 hours, our expectation is that this low will break out from this. This market will break out from this low. But we see what it changes. And how do we know that there's a changes from our lower time frame? But I think you are paying attention only on your 4 hours, you won't have taken this opportunity that I've taken. That's why advanced market structure is important. You say, where do you post this record video for each live session? I post some of them on my YouTube. You say, is this not a support and resistance strategy? No, it's not support and resistance. No, it's not support and resistance. So, how did I know? From this particular zone, I aligned the 4 hours and 15 minutes time frame all together. 4 hours, 15 minutes. 1 hour, 5 minutes. That's why advanced market structure is very important. And now, this market is still going up. I'll continue taking opportunity. This is now a market structure shift. to the upside. Now, this market structure shift shows that I have every audacity to continue buying. I have every audacity to continue what? Buying EU. That's what this market structure shift shows. It has shown that markets have totally changed from a bearish order flow to a bullish order flow. So all my attention, all my focus on EU is continue buying. Continue buying. And now we've seen that there's an order block somewhere around this zone, but I haven't seen liquidity yet. It's an order block already. From the 1 hour time frame, this one, from 4 hours time frame, this is an order block from the 4 hours time frame. I will still have other block to be of casting markouts, but I'm thinking this other block has been mitigated. This one I will see here. Or except I use this one will be here. Price might likely no expect this one, I might come back to expect this one. And mind you, price might not likely expect both of them. It might come back to your 15 minutes. Because in your 15 minutes now, we have something like this break of structure. So this is like this. I don't know what's going to happen here, but if I have to mark out other block, our other block will be somewhere here, but there's no liquidity in your 15 minute time frame. Mind you, your main focus should be that of 4 hours than 15 minutes. Why? Because the high have been broken. Except the market sentiments change. Sometimes market might likely respect your 15 minutes order block and neglect your 4 hours order block. It might likely do that. But in a situation where price does break out from a particular high in your 4 hours or low in your 4 hours or 1 hour, pay more attention to your 1 hour order block or 4 hours order block. But I didn't mean price is within the high and low. You can pay attention to your 15 minutes time frame and 5 minutes. Just like when price was able to change from here, it's still between